And in an adoption phase of a technology like this, you're going to find that. And you had it in Amazon back in 1998, 1999, when it went down 95%. But if you look at a chart of Amazon now, it looks like a tiny little speed bump in the price because it's been adopted so rapidly and massively since then that you barely see it. So, and that's what is the same thing with Bitcoin. You could look back at older charts and it barely registers on a dollar basis. Again, that's why you look at a lot. But that's what I tell people. It's digital gold. It's a digital gold upgrade. And so I have more conviction in Bitcoin as an investment and as a secure asset than anything I've ever been involved in my 30 years in Wall Street, and it's not even close. So the risk reward for this asset to me is compelling, and it's something that I intend to be involved in for a very long time.
James Lavish makes a compelling opening statement. Bitcoin is becoming the alternative to the unstable global banking system. Although the majority of people still have faith in conventional assets like bonds and currencies, he adds, those institutions are becoming more and more vulnerable due to growing debt and limitless money printing. In contrast, Bitcoin is limited, decentralized, and impervious to governmental control. Lavish claims that we are seeing the beginning of a significant change in which Bitcoin becomes a trustworthy hedge against systemic risk rather than a speculative asset. According to him, this is about surviving in a world where fiat money is becoming less and less credible, not only about price action. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
Helping fiat to stay afloat for a little bit longer by adding in a sprinkling of higher return into. Just wondered what you thought about that.
Yeah, no, I definitely do. And I think that, ultimately what people are going to understand is that Bitcoin it will become so stable. Of course, we're in the adoption phase. It has volatility. It's going to continue to be volatile for a while, but eventually that volatility calms down and acts much more like gold. It'll actually be even better than that because gold still has this ongoing, supply issue. Not issuance of supply. You mine more gold, price goes up, mine more gold. Bitcoin price goes up, you can't mine more Bitcoin. You're getting what you get. That's it. The difficulty adjustment will change for the amount of people who are trying to mine it to protect against that. So that's the thing, is that it will become so stable as a protection of your wealth that it'll be better than bonds, because bonds, and people will recognize that, and bonds return an interest rate, yes, but it's just a stable form of income, and so there's a need for that. So I'm not saying bonds will go away, but I'm saying that it'll strengthen certain currencies like the US dollar, especially if the US government takes and puts Bitcoin on its balance sheet. If it starts creating this reserve that they're talking about, they've got some in there, but it's an eyebrow hair compared to the amount of assets they have, the amount of liabilities they have. So I do believe that they're going to do that at some point, and when they do, that will help strengthen the dollar, because the dollar, the worry about is hyperinflation eventually in all these currencies. And I know people are listening, they're thinking the dollar's been the main currency forever. No, it hasn't. It has not been the main currency forever. We've had countless currencies fail over thousands of years. And this is the latest experiment. The latest experiment is, let's just put everything on paper and keep, borrowing against it, and just expanding that amount of paper that we issue, so each of them is worth less every single day. That's this fiat system, this MMT, modern monetary theory system, is not working. It's getting worse. It is that balloon that Gary Cardone had described, that is going to pop. It is going to pop at some point, unless we stabilize it. I think that Bitcoin can be a stabilizing force as an anti-inflationary asset that can back some of these things. It can back bonds. If you have that backing bonds, then you're gonna continue having the world reserve currency and the world reserve asset, the treasury, in perpetuity, because people are going to want to deal in dollars, and they're going to want to save in treasuries and Bitcoin, and that's the hope. Again, there are two different use cases for those. What we've been talking about this whole time is the problem of debasement of currency, meaning they must inflate away the debt across the world. All developed nations who issue debt in their own currency is doing that. They're going to continue doing that, continue to soft default in perpetuity. The inflation numbers that they admit to are not real, and it's worse than that. The inflation of assets around the world is much more closely tied to the expansion of the money supply, expansion of leverage, liquidity. Okay, so, and they need to continue that. Well, the Bitcoin network is backed by all the miners and all the hash and all that powers the network is backed by 80 terabytes of energy. So terawatt hours of energy. So 80 terawatt hours of energy. So for people who aren't scientists or electricians, that's the equivalent of the power of 21 full-scale nuclear reactors running 24/7. So that makes it nation state level resistant. And so Bitcoin is safe, it's dependable, it's secure, it's the most secure network in the world, strongest network in the world, and it's only growing stronger. So it's like a digital gold super upgrade. And so yes, the price is volatile because it's in the middle of the adoption phase. The volatility will dampen, but the most important thing is even through that volatility, it's volatile to the upside. So as it's being adopted, it finds these pockets of price discovery where it just jumps really quickly and stays there. It jumped from 60,000 to 100,000. It jumped from 100,000 to 120,000. It just does that. It just stays there, and then it has a massive drawdown. Again, because it gets way ahead of itself.
Although the total number of bitcoins will only ever be 21 million, each one can be divided into 100 million smaller units, known as satoshis. 2 quadrillion units are so readily available to facilitate daily transactions and international trade. Although gold has long been regarded as a reliable store of value, it is said that all of the gold ever extracted could fit beneath the Eiffel Tower. Bitcoin goes even farther. In addition to being far more divisible, it is also easier to transfer internationally, and it is made to blend in well with contemporary digital finance. It is also scarcer than gold. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
And in an adoption phase of a technology like this, you're going to find that. And you had it in Amazon back in 1998, 1999, when it went down 95%. But if you look at a chart of Amazon now, it looks like a tiny little speed bump in the price because it's been adopted so rapidly and massively since then that you barely see it. So, and that's what is the same thing with Bitcoin. You could look back at older charts and it barely registers on a dollar basis. Again, that's why you look at a log chart. But that's what I tell people. It's digital gold. It's a digital gold upgrade. And so I have more conviction in Bitcoin as an investment and as a secure asset than anything I've ever been involved in my 30 years in Wall Street, and it's not even close. So the risk reward for this asset to me is compelling, and it's something that I intend to be involved in for a very long time. So what is Bitcoin? Well, I would think of Bitcoin like digital gold. The difference is it's on chain, and it's perfectly auditable. Okay, you can see who owns what, as long as you know, if you have the know your customer aspect of it, whatever. This is why terrorist organizations are telling their donors or users don't give us Bitcoin, because they could see it. We don't want it's all publicly viewable on chain. Anyway, perfectly auditable. So if you say that you have a certain amount of money in a wallet that is in escrow, for instance, for a transaction, you can see exactly what's in there on the time chain. You can't do that with gold. Gold is problematic. You have it, if you have physical gold that's stored in a vault somewhere, maybe in the Bank of England, maybe in Switzerland, then it might be like it happened to JP Morgan $50 million worth of gold-plated nickel. You have to literally cut into the bar, or you do physical tests on it, chemical tests on it to see that it's real. Not with Bitcoin. You know exactly what it is. It's also so easily transferable. It is, it would take you weeks or months to move $1 billion of gold across the world, because you can't just send it on an airplane. You need people and trucks and drivers and armored vehicles and security and boats, and it would take you a long time to move $1 billion of gold. You can move $1 billion of Bitcoin in 10 minutes. Done. One person to another for a fraction of the cost, for a few dollars, as opposed to however millions of dollars it would cost to move that much gold. So that's number 2. Number 3 is it's perfectly decentralized, meaning that it started out and grew organically, and it's governed by nodes that are decentralized across the world. And so those nodes govern the code, and they govern whether a transaction goes through. And if a false transaction tries to be put through, that node gets kicked off there you go, my node. It's kicked off, mine is back over there. It gets kicked off the database, or it gets kicked off the network. So that prevents something called the double spend problem, where I could tell you I sent you my Bitcoin, and tell him I sent him my Bitcoin, and send them both the same Bitcoin, and get, it's not possible with Bitcoin. They'll just kick you off the network. And it's unchangeable. So once I do send you that Bitcoin, it's yours. That's it. It's immutable. I can't, renege on it.
What does all of this mean then? According to James Lavish, Bitcoin is a long-term shift in the nature of money rather than merely another speculative venture. It feels unstable at the moment because it is still expanding and gaining traction globally. However, in the early stages of any significant technology, such as Amazon in the latter part of the 90s, the internet in its infancy, or even gold when it first emerged as a reliable medium of exchange thousands of years ago, volatility is typical. The price fluctuations will eventually subside as more organizations, governments, and private citizens embrace Bitcoin, and it will replace other currencies as a trustworthy store of value. The main argument made by Lavish is that the fiat monetary system is nearing its end. Every paper currency eventually fails due to inflation and debt, as history has shown, and the current system is no exception. Governments continue to devalue people's savings, print more money, and gradually undermine confidence in the dollar and other currencies. Bitcoin provides a solution in the shape of a globally accessible, fixed supply, and extremely secure currency that is impervious to governmental manipulation. The essential point is, while Bitcoin may crash, its adoption curve is expected to make today's volatility seem insignificant in the future, much like Amazon recovered and became one of the most valuable firms in the world. Because it is more difficult to make, more portable, and designed for the digital era, Lavish refers to it as digital gold and says it is even better than gold. The conclusion is that Bitcoin is more than just an investment. It is a hedge against the depreciation of fiat currencies, protection against inflation, and possibly the foundation of a more robust financial system. Lavish is all in, since he thinks the benefits greatly exceed the risks. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.